today we're going to talk about tax amendment for if you made ERC claims. So let me share the screen. All right, so as I mentioned, so we're going to talk about the ERC-related tax amendment and also accounting. That's myself. So I have a PhD and a math professor, a retired math professor. So now currently I'm with Community CPA. So our firm's phone number, main phone number is 515-288-3188. Okay, a quick disclaimer. So basically, if you're just attending this webinar, just listen to us and then try to take some actions on your own. So you're at your own risk. So you are strongly advised to consult your own accountants or attorneys if you want to do any work based on the information here. But of course, we do try our best to ensure the information we provide is current and accurate. Okay, but with the time goes by, so some of the information that's here that may be current and may become outdated. So let's say 3 months from now, for instance. All right, so a quick introduction of our firm. So we're a CPA firm. Okay, our website communitycpa.com, and we do have a YouTube channel, Community CPA YouTube channel. So where you can find our webinars, including today's, for instance, which will be posted up there, probably by next week. All right, and so we provide the standard CPA firm services, accounting, tax, audit, payroll, and also business advisory. And we do also have a legal team, licensed attorneys that provides legal services as well. And so collectively, our staff speak 9 different languages, English, Chinese, Spanish, and several other ones. Okay, so before we get on to our content today, so quick reminder, today is the tax filing due date, the regular tax filing due date for 2022 tax returns. And so it's for the following types of tax returns. So if you have personal tax return the personal tax return 1040, or if you have a C-Corp business, so then a C-Corp tax return 1120 is also due today. And for those of you who have a partnership or S-Corp, so those were due a month ago, so that was March 15th of this year, for your 2022 tax return. So today, what's due today is the 1040 personal tax return and 1120 corporation tax return. Right, if you have the time to complete your tax return, so you have until midnight today, local time, to file your tax return electronically. Okay, so if you want to use the post office, of course, they close sooner. So you do have to check the last one that closes today, so make sure you drop them off timely. And then for those of you who do not have time to finish the tax return preparation, and you can file a 6-month extension. So again, that can also be filed electronically. And so you can file an extension of time to file your tax returns, that you'll be granted additional 6 months. Okay, so which means that for your 1040 and 1120, if you file the extension, so then you have until October 15th to complete your tax return filing. And also, if you expect to have tax due, so you're going to owe IRS taxes, we advise you that make an estimate of how much tax you will owe, so and then submit a payment with the extension, so to reduce the penalty and interest that may incur. So when you file your actual tax return later in the year, even with the extension. Okay. All right, so now let's come to the ERC. So the reason we cover this topic today is that, during tax season, a lot of clients, they heard of this ERC program, so they want to learn a little more about it, okay, which is not the main topic of what we want to do today. So what we really want to do today is still tied to the tax return. So that is, if you are business is eligible, let's say if your business is eligible for ERC and you claim the ERC and you receive the IRS checks, what do you need to do? So is that done just like a PPP, or you need to do something else? Actually, you do need to amend your tax returns. So that's what we want to touch on today. Okay, so a quick summary of what the ERC is. Okay, so the ERC, and that's the abbreviation for Employee Retention Credit. Okay, so it's a credit that's introduced in CARES Act back in 2020. Okay, April of 2020. Okay, so that's a credit against applicable employment taxes for eligible employers. Okay, I stress those words here. So eligible employers means that it's not an automatic. Just because you run a business, you were doing payroll, does not mean so you would qualify for or you would be eligible for ERC. Okay, so there are some eligibility requirements, which I'm not going into the detail, but there are eligibility requirements. You have to be eligible. And then, if you're eligible, if you claim the ERC, really you're claiming it against the applicable employment taxes. Okay, so it's not against your income tax, but against employment taxes. Okay, so what are employment taxes? That really it's a Social Security tax or Medicare taxes. Okay, so the way the ERC works is that depending on which quarter you are in, you are claiming the ERC. For most quarters, you actually are claiming a credit against the Social Security tax. Okay, for a couple of quarters, that's third quarter and fourth quarter of 2021, you're claiming the ERC against the Medicare taxes. Okay, so and also it's only the portion imposed on employers. Okay, so this is an employer claim, your tax credit, the employer employment tax credit, you're claiming against either the Social Security taxes or Medicare taxes. That's the employer's portion. All right, and so the CARES Act, as well as the other acts that extended the ERC program through September, as a matter of fact, even December of 2021. Okay, but not for all the business, but only for some. Okay, anyway, so then. There's a formula for you to calculate the ERC, so based on the qualified wages. So if that amount exceeds your either Social Security or Medicare taxes in the quarter, so the excessive amount can actually be treated. It's going to be treated as overpayment by IRS, and then that overpayment that will be refunded back to you. So for those of you who had experience filling out a ERC claim forms, you saw on the claim form there's the total ERC that you calculated by the formula, which is usually either 50% or 70% of the qualified wages, and you have divide that total amount into two separate portions. So one portion is called non-refundable portion of ERC. So that really is the employer portion of either the Social Security taxes or the Medicare taxes. Okay, and the refundable portion will be the one in excess of the taxes. Okay, and so then those will come back to you. But of course, if you already paid for those taxes, especially in the case when you're claiming retroactively, which most employers are doing that way, so you're not claiming beforehand, you're claiming retroactively. So then you already paid for those taxes. No, that portion will also come back to you. All right, so that's what the ERC is. It's a credit against payroll taxes. Okay, and then what do you do with it? If you received that you're eligible and then you claimed the ERC, and so IRS does require an income tax amendment. Okay, so this is the requirement. You can find the requirement in IRS Bulletin or IRS Publication 2021-49 and Part 4. Item C. Okay, so these actually are the exact words. Okay, I didn't put a quotation mark, but they basically are the exact words from that bulletin. Okay, so you should do a tax amendment. Okay, so and then you do it in the following way. So first of all, there will be a reduction in the amount of deductions allowed. Okay, so a deduction really is an expense item on the tax return. Okay, so there should be a reduction in the expense. Okay, caused by the ERC. Okay, and that reduction occurs for the tax year in which the qualified wages were paid or incurred. Okay, so if you're claiming 2020 ERC, for example, okay, so what are you doing? You're using the 2020 wage as the basis. Okay, you calculate from your 2020 wages, and so then you calculate how much you should get from the quarters in 2020. Okay, so basically the qualified wages were paid in 2020 if you're claiming the 2020 ERC, right? So then that reduction in the expense should occur in 2020, in the year that those wages were paid. So in other words, you should not count this reduction in expense does not occur in the current year you receive the money, but occurs in the year when the underlying wages were paid, which would be either 2020 or 2021, depending on which quarter you claim the ERC. Okay, and an employer should file an amended federal income tax return for the taxable year in which qualified wages were paid or incurred. Okay, as explained above. So the year in which you paid the qualified wages were 2020 or 2021. So you basically, what this means is you need to go back to amend your federal tax return for 2020 or 2021. Okay, so you do not report the ERC as either an income or reduction expense in 2022 or even 2023 when you receive the money, but you actually amend the tax return for the years when you paid out the underlying wages for the ERC, okay, which would be 2020 or 2021. Okay, and when you, for those of you who receive ERC, you should have noticed that the check amount typically is higher than the ERC amount that you calculated. Okay, The reason for that is IRS not only pays you the ERC amount, but also pays you interest. Okay, so the interest starts to accrue from April 15th of the year after. For example, if you are claiming 2020 ERC, so basically interest start to accrue from April 15th of 2021. Okay, right. And so if you receive a check this year, for example, like today, for instance, and that's like 2 years of interest for the 2020 ERC. Okay. But the interest you receive, the interest portion, should be recorded as or reported as other income in your 2023 tax return if you receive that in 2023, or if you receive your ERC in 2022, the interest portion should be reported as a 2022 other income. Okay, so again, so the base ERC amount goes back to, should be used to amend your tax return for 2020 or 2021, but the interest that you received on the ERC check, that should be reported on the year you actually received the checks. All right, so that's what the IRS requirement is for the tax amendment if you claimed or received the ERC. And so I quickly mentioned two common scenarios. So one is C-Corp and one is S-Corp. Okay, so if you received a ERC for your S-Corp, okay, so for S-Corp, you only need to amend the company tax return. Okay, so for C-Corp, we know that the tax return form of C-Corp is 1120, so you only need to amend the 1120. Okay, so the ERC, when you reduce the payroll expenses, whether 2020 or 2021, so that will result in an increase in the net income. Of course, you will have probably owe some taxes, and that you need to pay IRS because of the ERC. And so you need to amend the tax return, but you only need to amend the company level. Okay, so because even though you had the higher net income because of the ERC, and you don't have to distribute those out. Okay, so as dividend, so you can just keep them on the book, and so then you can distribute them out in this year, for instance. Okay, so you receive the check, and so you can distribute some additional dividend out this year. So then the shareholders can resolve that on their tax return for 2023 tax return when they file it in 2024. Okay, and instead of going back to do the amendment. Okay, so if it's a C Corp, the tax amendment is a little bit easier because you only need to do a company level amendment. Okay, so the specific lines that need to be amended, so there are actually more than just one place. So obviously on page 1, you had to first of all reduce the your wage expense. That's either line 12. I mean, it should probably both lines. In most cases, both lines. In line 12 and line 12 and line 13. Okay, so line 12 is compensation of officers, and then line 13 is for salaries and wages of other employees. Okay, so the officers' payroll should be included in line 12. All right, and then if you claim the ERC against both wages of officers and wages of other employees, then you probably should split your ERC amount to reduce the payroll cost in line 12 and line 13. Okay, so and of course, in most cases, if you want to make it simple, you can probably just get by reducing the payroll or wages and salaries in line 13 only. All right, so that's one place you need to make the amendment or adjustment. And the other place would be on the balance sheet. Okay. And so there are multiple ways to do this because of the adjustment that you can balance things out because if you are using a tax software, you'll know that if you simply make the prior change, so that is reducing the payroll expenses, your original tax return, when you go to the balance sheet, will no longer be balanced. Okay, so you had to make some adjustment, to balance things out. There are different ways to do the adjustment, so I don't want to go into the details. I think that should be one that you should talk to your tax preparer for them to help you make that adjustment. Okay, so unless yourself is good at that, then you can probably go through the list and then you'll make the appropriate adjustment. So there are more than one way to do it. That's the main reason I don't want to go into the details about making those adjustments. Okay. All right. So you can you can adjust capital stock, for example, or so or other things, for instance. Okay. All right. And then that's one scenario. That's if you had a C corporation. So if you have an S corporation, things will be a little more complicated. Okay, and just because S corp is a pass-through entity, so at S corp level it doesn't pay taxes, and so you just do the calculation at the S corp level, and then you get a K1 from the S corp tax filing. And then you bring this K1 onto your personal tax return, and you actually settle the tax liabilities at the personal level. So if you have an S-Corp, the tax amendment actually requires you to make two amendments. For each shareholder, if you have multiple shareholders, there actually will be multiple shareholders 1040 amendment. Okay, so you first have to make a company level amendment, because you had to, just like in the C Corp situation, you had to reduce the compensation office and of officers, and as well as wages and salaries. So you kind of reduce those two lines by the ERC amount. And so that's one place you have to adjust. So then you will get a new K1. So then you get a new K1 that each shareholder will have to amend their personal tax return 1040 with this new K1 after the ERC claim is entered on the 1120S tax return. Okay, so just like C-Corp, okay, so this is one place. In one place you had to, at the company level, okay, so at one place you had to reduce the wage expenses, okay. And so, of course, when you reduce the wage expense, that means that there will be an increase in the net income, and so there will be a higher amount of a K1 that will be coming to your personal tax return. So you should expect the result of that should be you may have to pay some more taxes at your personal level, okay? And then similar to the C-Corp, so you also need to make an adjustment entry on your S-Corp balance sheet. Okay, so again, so there are more than one ways to make the adjustment on the balance sheet. So I don't recommend that you try to mess with yourself, and unless you are really understand what you're doing. So otherwise, you talk to your tax preparer and our accountant to have them help you to make that adjustment on the balance sheet. Okay. All right. So that was about previously we just talked about tax amendment. And for those that are in the accounting profession, we know that the tax return may not necessarily match your financial statement. Okay, so if your business regularly prepares the annual financial statement by GAAP standard, and especially if you're a company that you require audit financial statements periodically, so how to do the accounting for ERC and is actually quite challenging. Okay, for the tax return, I think it's relatively easy, but for a proper GAAP standard, the ERC accounting is actually quite challenging. So there are several different accounting models that were proposed. One of them is to use GAAP's loss recovery model for the ERC credit the claim retroactively. Okay, so especially you're claiming after the year. Okay, for example, for 2020 or 2021 ERC, so you're just claiming now. Okay, so you're claiming it retroactively. So with the loss recovery model, it's possible that you may not have to go back to make any changes to your 2020 or 2021 financial statement. Okay, you can just because the timing you need to do the adjustment is only when the claim is when the recovery of the claim is probable. Okay, well, I probably put here in this context probably should be changed to probable. Okay, but anyway, so you can just say only now you determine it's probable that you can recover that. Okay, so anyway, so there are different models that you can look into to do the ERC accounting, and especially if you're an auditor or you are preparing a audited financial statement, you want to look into the different possible models. Okay, and of course, in that situation, so a disclosure or note should be added to the financial statement. Okay, so you do want to write out, why you have this claim, and justify the eligibility, and also make some discussion about the other things related to the ERC. Okay, so the reason that just the eligibility is a big item here in the disclosure or note is that so even actually when you have the check, okay, so the ERC check you claimed and you received the check, When we do an audited financial statement, or even just to do by a GAAP standard financial statement, that does not necessarily mean that you are certain that you are eligible for that check, okay, that you already received. Okay, so and you do have to justify, you do have the eligibility analysis in the disclosure to make sure you actually are entitled to keep that credit you received. Okay, so these words, they actually do mean something even when you receive the check. All right, and also if you are using the ERC to offset the payroll expenses, such as when the way you did on your tax return, okay, so then you should not just simply just enter the net amount on your financial statement, okay? So you do need to make a separate entry for the ERC. So the payroll expenses and the ERC, of course, there's a net result, okay? But you should not just enter a net amount. You do need to enter two separate entries. And of course, all of these discussions are meaningful only for people who knows a little bit about accounting, about the financial statement. Okay, so then for those audience that don't know much about accounting, so you can just ignore this. But you do need to understand the requirements for doing the tax return amendments that were discussed in the previous slides. All right, so that should be it for today. So just a final reminder. So all of our webinars can be found on our YouTube channel. Okay, and you can go to our website, communitycpa.com, to check out upcoming webinars, as well as you can find a link for the past YouTube webinars. Okay, so if you have other questions you want to ask us, you can email to Catherine@communitycpa.com. So that's a general email for client interaction. Okay, or you can call our main number 515-288-3188, and we're open Monday through Saturday, 6 days a week from 8:30 a.m. through 5:30 p.m. Okay, also just final words. Today is a tax due date. And so if you have not filed your tax return and don't have time to file, make sure you file extension. All right. Thank you for listening and watching, and see you next time. Bye-bye.